Hi, ladies and gentlemen. This is Diane Cardano with the July edition of the Hot Off the Press Real Estate Market Report. Now, speaking of hot off the press, here's some interesting news. It has to do with people who attempt to sell your home by owner, thinking that selling their home by themselves can help them make more money. Well, this is a quote from Fannie Mae's website. Unless you're experienced at selling homes, it usually makes financial sense to get a professional to help you. Now, homes sold by agents typically sell at a higher price and they spend less time on the market. This is an actual recommendation from Fannie Mae itself. I can't tell you how many people are coming to me after trying to sell their homes for months, wasting time and mortgage payments they could have avoided by listing with me earlier. Your home is one of your most valuable financial assets, and you owe it to yourself to trust it to a professional. Let's move on to the next slide. And sales. Now, existing home sales were dropping like a rock over the last couple months. And what I've been telling you here is, let's not worry about that. What's really taking place was a number of distressed properties, foreclosure, and short sales that were dropping. And the number of non-distressed properties were actually increasing. Well, I was right. Now, we're seeing the entire existing home sales market is turning positive, mostly because there was a real pent-up demand for good quality inventory. And now we're finally starting to see that happen. I don't know if that will continue though, long-term or not, but let's look at the pending home sales report. Now remember how I explained last time that the pending home sales about 30 to 60, 90 days ahead of the existing sales report. Meaning, when a deal goes into contract, it's counted in the pending home sales, and when it closes, it becomes an existing sale. And we can see from this slide, each of the last 2 months pending sales have had strong increases. Now, as you come to expect of me, I challenge myself and my team to search deeper and come up with out-of-the-box ideas when it comes to forecasting to keep my clients ahead of the market. Those of you who have attended my seminars know that one of the things we discuss is how my strategic marketing results in more eyes on your property, leading to more foot traffic in your home, resulting in more top dollar offers the very first day your home comes on the market, having buyers waiting outside the door. And I took that concept one step further and came to a logical conclusion. Foot traffic in homes is a great indicator or a precursor to pending home sales report. So I used National Association of Realtors reports to see how many people are actually looking at homes. Let's take a look at this chart. Now, what we can see is that the foot traffic is an indicator of future sales. The extreme drop in foot traffic was totally in line with the drop in sales you saw in the reports I just showed you. So again, just like the pending home sales is a precursor to the existing home sales, the foot traffic report is a precursor to the pending home sales report. So we now can see the number of houses agents show has a direct relationship to the number of houses that are going under contract. Using these numbers is just one way of bringing us one step earlier to what is coming on the market. What does all that mean to us? Well, it means we're going to be selling more and more houses this summer. That's great news. So let's look at prices. Here's a nice graph from Realtor.com taking a look at the median home prices in 2001, 2011, 2012, and 2013. And what is it projected to be by the end of this year? So prices are going up. The great news about this is equity is being returned. Some of the negative equity is being washed away, and each day the market is getting better and better. So let's wrap up this month's report with a home price expectation survey, which is a nationwide panel of over 100 economists, real estate experts, and investment and market strategists. First, a quick look at the historic average annual appreciation, pre-bubble, from 1987 to 1999. We're seeing an average annual appreciation of about 3.6%. Now, during the bubble, that number jumped to 7% a year. Prices were skyrocketing. Then came the bust, where prices fell 5.2%. But what we're looking at now is getting back to normal numbers again, and recovery since February 2012 is 5.2%. We're coming back to normal numbers. So what do those experts say is coming and is projected going forward from 2014 to 2008? Well, let me show you. They project this year is going to be still a little bit high because the pendulum has not finished swinging. Then for a couple of years after that, the pendulum swings slightly back the other way, a little less than 3.6%. What we're looking at is a return to more normal market. As the housing inventory improves and becomes steadier at that 6-month level, then we're going to see a much more normalized market. Well, that's it for our July market report. Remember to check back regularly and stay current and ahead of your competition. Now don't forget, we have our Home Seller Toolkit available to our blog fans. You can go to homesellertoolkit.com or just call us at 215-576-8666.